It was great technical information. That's something we could absorb and understand. Thanks for portraying it that way. And the other part of this puzzle is the attitudes of the affluent consumers that affect everybody in the room that's either in an ancillary service or in the brokerage marketplace. And I happen to serve on the board of directors or advisory board for the Luxury Institute out of New York. And they study luxury buying habits. They issue really cool white papers that would make good topics for discussion at your next sales meeting. So Luxury Institute, New York, and look them up. And I think most of those white papers are free. You don't have to worry about that. Now, the next panel that we have here is about insurance. And I'm not even going to try. It's a disservice for me to read Bob Denison's bio notes. You have to read them yourself, okay? And about his family and all that. It's a different approach. It's a wonderful thing. It says a lot about Bob. But we all know, I will say this about that, though, and that we all know of the great legacy and the lore and the legend of his grandparents, Frank and Gertrude Denison. And Bob, how many yachts did they end up building, plus PT boats? 260 yachts. And I have always said that Broward Yachts did more weeks of charter than any yacht builder that's ever been around. So, ladies and gentlemen, I'm going to bring up Bob now, and he can in turn introduce his panels about insurance update, what happened and why.
Thank you. All right, so we got insurance. I'm going to bring up Tom and Sean. We're going to have a really cool conversation about this. Insurance is really freaking important today. The economic stuff we saw was important. And if you were to pull the room on things that kind of keep you up at night as a yacht broker in this industry, you'd hear some people say, of course, the economy. You hear some people complain about Joe Biden. You'd hear some people talk about hurricane season and other people talk about slips, but everybody would say that insurance is affecting the sale of yachts right now today. And it freaks me out. And Sean and Tom are going to kind of freak us out more and also make us feel better about our lives, right?
Yes. Yeah.
So before I get started, I just want to let you guys know, and this is an important thing, you have the opportunity right now to make somebody's day, and they're going to go home and tell their significant others what a special thing happened to them. So I'm going to ask two people to stand up. It's going to take about 30 seconds. Grant Henderson, can you stand up real quick? And DJ, is DJ still here? Both of these guys just sent me a text. I just wanted to honor it. Grant, this is serious. Grant sent me a text. He said, I'm having a really good hair day today, and nobody said anything. And DJ, DJ's got a birthday coming up in a few days, and he was like, nobody ever wishes me happy birthday. So could you guys give them a round of applause for great hair and a birthday?
Yeah. Hey, man.
Thank you. Tom Gresh, you guys know, and Sean, you guys know. Sean is with, I'm not going to go through their whole bios, but they really know the insurance industry better than anybody in this room. Tom's been doing it his whole life. He started his career actually as a sportfish captain, won a bunch of awards, then he got in the insurance game. Sean is a lifetime boater, began his career in 1997. Do you guys know what happened in 1997 here in South Florida as a sports community?
No.
The Marlins won a World Series. I was a bat boy at the time, if that makes you feel any older. And he started in 1997, that was 27 years ago, doing insurance, and he's here now. A number of promotions. He started in 2005 with AIG, promoted, and now he sees himself here as I'm going to get this right, the director of specialty.
Yep.
Worldwide and the whole world for AIG.
Whole world.
The whole freaking world. That's amazing. And he's here to offer up some insurance advice. I got a few questions. They're going to answer them honestly. Some of it's going to be annoying to hear because insurance can be hard. But the idea is that we all walk out of this room having a better understanding of how to take care of our clients and how to better make sure that they can get good insurance and all that stuff. So Tom, I'm going to start with you. And it's an honest question. I just used the word annoying. What is the most annoying thing about being in the insurance business today? Other than having to tell people that you're in the insurance business.
Yeah. You telling me how bad we are, right? Probably how unstable the market is. When we talk to a broker or a potential client and we say one thing and next week it changes and the market is changing that rapidly, or it has changed that rapidly. So what is acceptable today may not be acceptable next week. Or if the closing is 30 days from now and we have a quote now, usually that quote's locked in. But the market is changing. Something we've had a stable market for many, many years. In the last 2-3 years, especially after Ian, which was probably a big blow to the market that nobody was expecting. Really just created chaos and an unstable situation here.
That's really difficult, really annoying. It's the uncertainty of it, right? And there are some cool things of what you guys do. And Sean, we were actually talking kind of prior to this. We were talking about the hard parts about being in the insurance industry, but like what parts of your day bring you joy? What parts of it are fun for you?
Well, I really love my job. The best thing is providing a solution for our clients to fulfill their passion. My job involves math, it involves negotiation, it involves accounting, it involves science and art. So that part's really fun. The best part is providing that solution. The second best part is relationships. It's a relationship business. I've got many friends here in the room that I've known for 20 years. And this little community of boat relationships is the best part.
That's good. Who's your favorite yacht broker?
Anyone that's bringing me business that day.
Okay, that's. So he just said relationships, and now you pull that shit on us. So it's really just the money. Okay, Tom, there was somebody, I don't know who comes out with this stuff, but they talked about like the hurricane season in the coming years, whether it's going to be good or bad or normal or whatever, and it looked like I think they advised it's going to be kind of normal. Can you tell us about? Is that true? Is that kind of what most of those guidance people are saying? It's going to be about normal, and then does a guidance like that affect insurance forward looking, or is it still going to be sort of high no matter what?
Well, what's normal anymore, right? What was it? A rainstorm in Fort Lauderdale, right? That flooded half of Fort Lauderdale. Is that normal? So I don't know what is normal with that. I look back at hurricane season, and I look at last year. We have Ian. I mean, I wasn't really affected. I'm in Palm Beach County, so it just seemed like a little tropical storm, some rain for a day and a half, and it's gone. That was the third largest, costliest storm in U.S. history for hurricanes, over $112 billion. Maybe it wasn't a large yacht loss, but the flood loss, the property loss, the damage loss, it all comes in the same equation with catastrophic exposure in yachts in Florida. Sean probably knows, with AIG, auto was one of the largest losses over there. It's not yacht, but it still comes in the same picture as catastrophic, and the cost of insurance and the risks that the insurance companies want to take, especially in catastrophic areas. And catastrophic, it's not even just hurricanes. In the whole insurance picture, Sean can talk about it a lot, but wildfires, they affect our insurance rates. So we'll see what happens. As far as looking backwards, how it affects rate, I'm not sure. Sean could answer how a forecast, but I doubt the forecast affects rates. They're looking backwards and at their backward losses, probably more than that.
Yeah, I think you started off well saying what is the new normal? And the new normal is inflation. The new normal is increased cost of capital. The new normal is limitation of inventory and managing your accumulations. The losses are getting more severe and more frequent with climate change. And as an insurer, we can't turn our noses about that. So we manage our accumulations, and we have to make sure that we're writing reasonably in Tampa or St. Pete or Fort Lauderdale, that we're equally writing in Seattle and Traverse City, Michigan. We can't accumulate too much in one area, but the new normal is costs are going up, cost of capital is going up, reinsurance is going up, boat values are going up, repair costs are going up, and therefore the insurance.
I have a question, Sean. So one people ask me, so why does an insurance company care? Why don't they're charging a lot of premium right now, they're getting great rate, why don't they just write everything they can? So why doesn't a company do that? And they say, well, don't they want to make the money?
Again, it's not writing too much in one spot. So it matters. You can't chase the increasing claim frequency and volatility just by writing more accounts, right? We go and we have interest in cost of capital and our reinsurance expenses. We can't chase the premium that too high to get to a profitable place. We are not a charity. We are a for-profit business answering to our shareholders. Every insurance company is. And so, we have a responsibility to maintain sustainability to that portfolio and that profitability. So we can't just take everything on, and just increasing pricing isn't going to do it. We have to be more selective. We have to be smarter about managing our accumulations. We can't write every piece of business in Fort Lauderdale. Everybody's got to take a little piece of the pie. So I hope that answers your question.
Well, there's less people taking the piece of pie. Probably, 70% of the companies that wrote yacht insurance have pulled out of the market in the last 3-4 years. So we're only left with a handful of carriers now. So that capacity is left. It's not enough to spread it around. So that's one thing I think I don't know where that solution comes from.
Well, again, I would say that those companies that no longer exist didn't manage their portfolios well. They didn't have the right pricing, they weren't selective enough, and they overaccumulated.
Can I do a question now, Tom?
Go ahead, Bob.
Thanks.
Yeah,
That was a really, really good question, though, and it kind of leads into my next one, which is you talked about external premium or external factors affecting premiums. And to Tom's point, it looks like a lot of people have pulled out of the market. Looks like those that have stayed in, premiums are going up and up and up. If you could just talk about what are some of those external factors, and I love the way you answer that, by the way. Like you're a nonprofit company, you got to report to shareholders, but we also need to make sure that those offering coverage have enough money in their accounts to cover claims and things like that, right?
Right.
So can you talk about that? Like what else is going into it? I left my car unlocked in the parking lot today. I have no idea why. My car gets stolen. How is that affecting sort of like the macro yachting part of things?
The indirect correlation on your car theft claim concern is if you have a carrier that's providing both a car insurance solution and a boat insurance solution, and they're trying to make money in this state. So, whether they're insuring homes and autos and boats and personal excess and collections, they're trying to make a profit in this state. And so the indirect correlation on auto theft would be that the company's trying to make business, trying to make money and profit there, and it all is correlated. Sometimes you borrow from Peter to pay Paul. You might be making money on the auto business and not the yacht, and therefore there's a factor. For companies that aren't providing multiple product solutions, there are concerns about, they're trying to make money, let's just say, in the yacht space. But they are buying reinsurance on a whole portfolio that they might be providing products to beyond yacht. And that reinsurance cost has gone up dramatically because of the cost of capital. Reinsurers buy reinsurance on reinsurance called retro, and that cost is going up based upon the lack of profitability throughout the space. So, it's costs are going up in every single, lever of the business, whether it's inflation, again, increased cost of the product, increased reinsurance expenses, increased claims volatility, increased claims frequency. It's all related in terms of the overall economic picture.
And Tom, you do this day to day. You're talking to yacht brokers constantly about getting insurance. And can you tell us what's more challenging right now to get a boat insured that is an owner operator, smaller boat, or a larger yacht with crew? What's going to give you more of a headache there?
Certainly the owner operator, under that, whatever, $5-3 million, under that, definitely, any larger yacht now with a full-time crew, probably over 100 foot, it's probably not seeing many challenges as long as it's a quality build and, newer model. Certainly owner operator, that's where the market really got destroyed. We've lost so many markets that wrote the owner operators or part-time captain people, absentee owners. Very, very challenging market.
And another challenging market, I was actually talking to Ken and Kim back there earlier about, they were like, oh, we're here just for the insurance part of it. I was like, oh, that's so nice. And the thing that's annoying for them is the outboard thing, where you have insurance companies that are like, holy shit, 3 outboards, that's ridiculous, which was like what they were saying 15 years ago. And it's still happening. This like crazy, why do you need so many outboards? You're just going to kill yourself and others. It seems like that was a 15-year-old conversation. Why is it still happening? And to that point, do you think the bigger outboards like the 600s that are coming out will allow fewer and hopefully lower premiums, or is that not going to matter at all?
I don't know,
You
Sean
want me to
actually
take that?
underwrites that, so.
It's a problem on twofold. The increased cost, you mentioned the 600 horsepower Mercury V12, it's $85,000 a motor. That's an increased claims expense. The theft issue is more important than the performance challenge with these center consoles with multiple outboards. The life expectancy of one of those boats is very, very short in South Florida from a theft perspective. You will see requirements of tracking systems, very robust ones, high theft deductibles, 15, 25%, pretty serious deductibles. And that's because we're seeing this theft problem grow and grow and grow, even with the advanced technology of these tracking systems. What we see a lot, and these boats are kept on lifts, is that lower units are taken off of the boats while they're on the lift. And due to the supply chain problems, they're not getting new lower units for quite a while. Somebody said at dinner last night, it's advice given to just have a spare lower unit on hand. That's great advice, because good luck getting one if you don't. So that's the part of the challenge in these center consoles. The performance is one aspect, because you can stick as much power you want on a boat and it only goes 10 knots faster, but it's still, things are happening quicker. And when there is a grounding, the cost of these outboards, you had two Yamaha 300s, that's 50 grand. Now we might have 3 or 4 that are at 50 grand a pop. And so the increased claim dollars just means so much more to us when we're looking at our partial loss costs, and how many, what we're seeing also is what is selling the most are these center consoles with outboards, now triples and quads. So our claims frequency and our claims severity is going up.
So it's not just the liability getting hurt kind of a thing, which is obviously part of it a little bit, but it's so easy to steal these things that affects it big time.
It is both, but the theft and partial loss issues are more prevalent than the performance liability issues.
And Tom, we have people here now that are kind of like, what the hell, this is crazy. I hate my industry. I need to get out and start selling cars or something. Can you help us figure out what can a broker do? What can a company do to get a deal done, to help take care of a client and make sure that there's a smooth transaction? What are some practical good tips for everybody in this room as they navigate a deal in light of insurance?
And many years insurance used to just be an afterthought, but now it needs to be, a plan needs to be put in place. The conversation needs to happen with the client. So engage your client with that conversation. Have them work with someone that specializes in yacht, not just maybe their home insurance or their corporate insurance. There's many specialists in our area. Have them work with them. Another thing, Mr. Dunbar mentioned something about conflict resolution, and in the inner contracts, if you want to put a clause in there about obtaining insurance, being able to obtain insurance for the closing. We're seeing a lot of closings delayed. I'm sure you guys are too, where we're submitting the applications to bind coverage, and we're getting a lot of kickback from underwriters. They're not accepting the hurricane plans, so closings are getting delayed. And I've had some yacht brokers, well, if we don't close today, we're going to lose a deposit. We're going to close. We just need a couple more days to refine some things. Also, as hurricane season matures, companies are going to look, if we're trying to bind coverage and we have a storm out in the Caribbean, if there's any kind of forecast trajectory towards our East Coast, they may exclude hurricane coverage for that specific storm. So you may be able to close 5 days or 8 days before that storm, but that client may not have coverage for that particular storm if it comes into our area. So pay a little more attention as hurricane season matures and with storms out there. You might have to push off closings or try to get them closer, or maybe move a boat to the Northeast, do a closing. So just pay attention and get engaged on the insurance aspect sooner than later in the process.
So if you missed that or you weren't paying attention or whatever for just a split second, that advice was a really good one. What Tom's saying is, just like there's a financing contingency in a purchase and sale agreement, it might be a good idea, especially for first-time boaters, right? Or somebody making a big jump, to get that insurance contingency in there, because you truly could be putting your client in a very precarious situation if they can't get bound and they miss the closing date, correct? So why not add that? I had two more questions. Are going to be quick, and then we have a little bit of Q&A for anybody that has additional questions. Sean, can you tell us about, we're seeing a rise in custom policies, so it's not just your bread and butter, here's what a yacht insurance policy is, but something that's very unique and curated for a specific deal. Can you talk a little bit about that, and why is that happening more and more?
Yeah, I mean, as Tom said, why can't you just charge more money? And that doesn't solve the problem. So the customization comes into adding terms and conditions and warranties to the policy to mitigate our loss as the insurer, or to give more incentive to the client to have certain behaviors. Yacht policies have always been customizable at the high end of the scale. And so, what you're seeing on the what I would call a Main Street carrier, folks you see advertised on TV a lot that have animals as mascots, they're not generally in the customization business. We are, but you are starting to see that customization come in because, as Tom said, Ian was a huge loss in the space, and it was mostly small boats and mostly with those types of carriers that I mentioned, and they suffered hundreds of millions of dollars of losses, both in the boat and the auto space. They can't continue to write business sustainably if they don't start customizing their underwriting approach and add these higher deductibles or exclusions that we spoke to. Customization's always happened in the big boat space. That was originated in kind of a London format where everything is kind of, on a slip, if you will, and manuscripted. And we're seeing that kind of bleed down into the lower market levels because of this need for sustainability. They can't, it's a non-filed product, but they can't survive if they don't start to eliminate some of the exposure.
Yep. Tom, last question is, shit hits the fan, you got a problem, boat sink, something bad happens. Give brokers or administrators, anybody operating in this industry, advice on how to guide a client through that. Because I think there's been some very bad examples of brokers that are yacht brokers and insurance brokers saying, oh, sorry, you should have read the terms and conditions, go call this 800 number and figure shit out. Can you give us some real practical advice, the humanity of guiding somebody through a loss?
After the loss, after the boat's damaged. Well, the client has a duty to preserve the vessel from further damage. The insurance companies don't come out there and say, hey, we're going to pick up your boat. You don't drop it off at the auto dealership and they fix it. It's actually going to be your responsibility to find, they get estimates for the boat. If you have Towboat US, take your boat. But you got to preserve damage. You got to contact the insurance company right away if there was damage. And that would be through your broker or potentially, through the 1-800 number or something like that. Most likely it would be through me or whoever the broker was. I think it's important to read the policies too, right? He's going to say, well, you should have read your policy. But as Sean mentioned, there are a lot more deductibles and lack of coverage or coverage being taken away in the policies. Whether it's large lightning deductibles of 5%. If you're dealing with a $5-10 million boat, 5% lightning deductible is pretty substantial. You're going to have larger wind deductibles. You maybe have machinery deductibles. So those things could be hidden in there and could be surprises. But if you have your client work with an expert in the field, those things, there shouldn't be that many surprises if a loss happens.
Got it. Thank you, Tom. Thank you, Sean. We got time for 2 questions. Anybody have any? Yes. Can you? Yeah. I think you should just yell it. We don't need a mic. I think we can hear you.
What are you, from Brooklyn or something? Come on. So a question for the insurance folks. How much time, as a general rule, do you think a buyer should allow for in planning to do the insurance coverage and put the binder in place in time for closing, as a general rule, in your experience?
Well, I'm going to give you a vague answer. I'm sorry. It depends. It depends on what the boat is.
You sound like a lawyer.
I know. I'm sorry. I read a lot of contracts. If we're talking about what we would call a vanilla risk, a person that's demonstrated to have good experience, it's a newer boat, there's no known issues with that manufacturer, we don't have any specific underwriting concerns with the type of the vessel, then you can expect a decision within 24 to 48 hours. If it's a boat that has more challenges, whether it's older or the company went out of business, or we know that there's losses that haven't been disclosed to us, or there's an issue with experience, or the survey came back and there's 100 recommendations. Those take longer to go through the process because we want to provide a solution and we want to read through all that. We want to make sure that we ask the right questions of what's going to get followed up on for repair, what's the plan with the captain, what's the severe weather plan. Sometimes we can make these decisions very quickly, and sometimes it's a longer tail based upon the need to acquire more information. So, on brand new boats with great owners and good history and good continuity, especially if someone we've insured before and so we know that person, the decision is very quick.
I got a broad stroke question. What is the percentage of a purchase price, would you say, in today's market that it's going to cost you to insure a boat? If you buy $1 million boat, what would you expect your insurance bill to be?
Well, it depends really on where you are. And if we're talking about a brand new boat, then the rate equation is a different calculus than, say, a 10-year-old boat. Because when we insure a 10-year-old boat, we're getting 50% of what it costs new. But when I go to repair it, I have to pay 100% of 2023 repair costs. So there's a range. On a brand new vanilla boat, you're looking at still roughly a 50-cent rate or a little bit lower. But that's not what you're seeing in Florida. And so that's what I mean about geography. You know, a center console boat with triples in Florida right now is a $2 rate on a, say, a $500,000 value.
Can you tell us what that means, 50 cents versus $2 rate?
Yeah, you apply it to the purchase price, to your question. So on $1 million boat, you know, a 50-cent rate's going to be $5,000. A $2 rate's going to be $20,000.
And also one thing to consider, I mean, Sean's with, you know, AIG, and there's other companies, so Sean doesn't accept your risk. You know, there's other markets that may charge more, may take longer to quote. And as, you know, as a broker, that's what we have to do. We might have to go to several markets. Some are slower in responding. Some, like I said, some have more requirements. And those rates are all over the place, I think, right now, that where they used to be. There's so many variables in the rate now. I think one unique thing is we have a client where his center console premium is more than the premium for his 100-foot yacht. So that's more like a $3 rate, and that's commonplace. And those are difficult answers to questions for.
I'll give another example that I think is easy to understand. So catamarans are hit by lightning 3 times more frequently than a monohulled vessel because of the footprint of grounding. When a boat gets hit by lightning, you know, your average $1-2 million boat, we might have $250,000, $300,000 of electronics on that boat. When the lightning hits it, all those electronics generally go poof. And so we have 3 times more likelihood of having that loss. We don't love to insure catamarans in cat-prone areas getting hit by lightning, but when we do write them, that rate needs to accept the fact that we're going to have a much stronger likelihood of getting hit by lightning, or we exclude it.
Guys, that was the best insurance conversation of all time. Thank you, Sean. Thank you, Tom.
Thanks, Bob.